Okay, traders, yeah, I hope you are good, and I'm sure you are doing well with trading. So on our side, we are good also, we do well. And as normal, whenever I'm blessed, actually I do something about Forex knowledge, because I need people to have that understanding of what is a real Forex market now, and exactly how to approach that Forex market. So that's the only thing that I do whenever I'm blessed, whenever I get something, because sometimes you sit down and you say, yo, I know something, and there are people out there who are struggling with this, so how are you going to help those people? So you think about that, and then you decide to sit down and say something. So I'm blessed, and today I'm going to share something which is very basic, and mainly going straight forward, we're going to see what to call the dimensions. Now we're going to see what to call the dimensions of Forex analysis. We are very specific now. Forex analysis. We are going to see the dimensions of Forex analysis, or sometimes we call them as aspects. Some people call them as aspects of Forex analysis, or you can call them as dimensions of Forex analysis. So mainly, we have covered many contents about the Forex. We have understood many things actually. If you have not watched those videos, but you may go and watch. But we have never went very specific on organizing a Forex knowledge into one thing now. So here the purpose is to organize all the informations about Forex into a one thing, a one whole thing, which is now straight applicable in the market. So in analysis, now when we're talking about analysis, mainly we're looking on studying something. We're looking on examining something. You examine something, and the purpose is to understand it. So in order to understand something, you must look it into different ways, or into different dimensions. So when you are doing analysis, you always do a start. So after doing that start, you understand the past informations of the market, and then those past informations, they help you to understand the future move or the future progress of the market. So now, if that is the purpose, and always if you have idea about a direction of the market, it is all about how we are making money in Forex. It is all about having idea about the direction of the market before it takes place. So we will have different aspects or different dimensions. Some people, they call them as types of Forex analysis, whereby we will discuss about the three types. We will discuss about three types. Now we will discuss the three types specifically, whereby we'll cover the idea of fundamental analysis, fundamental analysis, and then we will cover the idea of sentimental analysis, and the last one will be the idea on technical analysis. We have to call it as technical analysis. Now these are the three dimensions, or the three aspects, or the three types of Forex analysis. And the main idea here is we're going to see maybe which one is the best, and which one to adapt, probably based on your trading, your personality. Maybe you are trading Shudo and everything. So I'm going to show specifically which one to adapt, and also how to apply both. Maybe is it important to apply both, and if you are applying both, how to apply. Now that will be the very basic thing, how to apply both aspects of Forex analysis, and that's very important, and mainly straightforward. Maybe the prior information is those analysis aspects or dimensions, they are dependent to each other. Always when you have both in place, you might be safe than having one. It is like maybe a chair. Now a chair, if it has been designed with three standing feet, always it must have those three. When one is missing, now the stability will not be there. Or if it is designed by four standing feet, always when one is missing, the stability will not be there. So it is the same as in types of analysis or dimensions of analysis. So now maybe starting with fundamental analysis. Now I'll just provide those information. You can mainly listen. I will write very few things there. So now fundamental analysis, now it is mainly based on various economic data. Now it is based on economic. It is based on various economic data. So now there are various data that are released maybe from banks and everything, and sometimes they can be political now, from political people that have influence on strength of economy of a particular country. Now the idea there is always those informations that have effect on the strength of economy of a particular country, maybe strengthening the economy or weakening the economy. So those are what we call the fundamental analysis. So having understanding or making a start on the various informations that provide the strength or provide the weakness to economy of a particular country, and mainly based on the currencies, maybe strengthening the currency or weakening the currency. Always there you are doing what we call the fundamental. And now mainly those release of those informations, or mainly when we concentrate on economic data, mainly they are concerned with things like interest rates. Now we'll discuss the things in detail in other videos. Now those informations, they are concerned with interest rates. We have things like inflation, we have things like inflation, and then we have maybe it can be the GDP, the gross domestic product, etc. There are many informations mainly based on economic informations. Now therefore, if those are the economic data, therefore there must be you must have now ability to interpret, you must have ability to study those informations. Example, the easiest way most people applying in fundamental analysis, they start maybe the previous and the forecast. They make comparison between previous and forecast in those economic data which have been released in various sites, because always there are various sites that release those informations. Things like fundamental, they are found, maybe someone may think about where I will find those informations. They are found in various economic calendars like Forex Factory. Now you can find them in Forex Factory, and also we have investing.com, we have investing.com. Always they release those fundamental data. We call them as FX calendars, the Forex calendars. So now when someone has made a start on those fundamental informations and have understanding of maybe what's going to happen, maybe strengthening or weakening of the currency, so a person may make appropriate investing decisions. Now it is based on whether the currency is going to strengthen or to weaken. Example, when a currency of a particular country or the economy is going to weaken, most people, they tend to invest into safe havens. Now we have those things, we call them as safe haven. Now we're talking about the Forex, so we have safe haven currencies. In Forex, we have those who call the safe haven currencies. Now, what are the safe havens? Always when we're talking about those safe havens, we're talking about those currencies from countries with a stable economy. We're talking about currencies from countries with a stable economy, including things like USD. Here we're talking about currencies like USD is a safe haven. Also, we have Euro is safe haven. We have JPY is safe haven. And also we can have CHF, also it is safe haven. So these are some of examples of safe haven currencies. So most people, they decide to invest in those safe haven currencies if they think their fundamental analysis provide information about weakening of economy of a particular country. So that's all. So you can make decision on that. So now, how are you going to enter into the market? How are you going to open a position and everything? I'm going to incorporate information by the end of this video to show how are you going to understand those things. Maybe you have awareness about the strengthening or weakening of a particular economy. So how are you going to open a trade? So I'm going to incorporate those information by the end of this video. Now let's go to sentimental. Now sentimental, we are talking about sentiment, and the sentiment is all about traders' commitment. Now we're talking about traders' commitment. Which direction traders are committed? Are they committed in a buy or are they committed in a sell? So always you must have awareness about other people, what they are doing. And mainly we have retail sentiment, and also we have institutional sentiment. We have retail and institutional sentiments. So you must be aware of how retail are committed, and also you must be aware of how institutions are committed, in which direction. So if you have those information about commitment of other traders, you will make a decision on whether going long or short. And the good way, I mean, maybe the simple way I can say, a simple way is someone may find that most traders, they are committed in buying. Maybe most traders, they are committed in buying. So if most traders are committed in buying, someone may wait because they will buy up to a certain level and later they will close their position, so price will go down. So sometimes people, they do something like that, whereby they identify some of the important levels where they expect that people will release their positions. So if they were committed long, so they will wait to to those specific regions where other traders will cross their position, so they will go short. That is one of the easy ways. So now, how are you going to identify those sentiments, commitments of traders? Now you can find them through indicators. Now you can find them through indicators. We have those who call the technical indicators. Now on technical indicators, we have this we call the sentimental indicator or the sentiment indicator. Now sentiment indicator provide information about how many traders are committed short or how many are committed long. So you can find them in your trading platform there. You can search for sentiment indicator. Example, in TradingView, we have a sentiment indicator, and also there are some built in and some they are maybe built out of the platform, so you just incorporate them in your trading platform. But also you can get sentiment informations by reading or interpreting COT report. Now we have this we call a COT report, commitment of traders report. Always there is a specific site that releases those information, so you can search on internet now a COT report. So this provide information about the forex currencies and also other instruments. You can find the commodities, you can find some stocks there. So always it has those informations about commitment of traders at a particular time. So after having those informations, you can incorporate in your analysis and decide on whether you are going long or you are going short. But wait until the end of this video. I'm going to show how specific are you going to incorporate all dimensions, all aspects, or all types of analysis. So let's finish the last one is technical. Now this is the most popular, technical analysis. Mainly technical analysis is based on reading the previous information or the past informations, and sometimes you read the present now in order to anticipate the future. That is all about technical. You read or you interpret previous or past informations and the present or the current in order to understand the future move of the market. So mainly it is based on interpreting candlesticks. You interpret the candlesticks. Sometimes you may interpret the chart patterns. They are now mainly we call it as price action. Now you can do what we call a price action. You interpret the action of the market now. So you may use those candles, maybe candlestick formations, pin bars and everything. Or you can interpret the patterns, things like triangles. You can interpret wedges, etc. So all of them, they will provide you with a probable direction of the market. That's what we call a technical. So mainly or specifically, technical analysis is very important in pinpointing the entry and exit. That's very basic. Always you pinpoint the exit and entry. So now maybe when I will be incorporating how to use both aspects of analysis, you will understand specifically. But for now, you have to understand that technical analysis always help to pinpoint the entry and exit. So now technical analysis also can be done through technical indicators. Now as usual, can use technical indicators. So technical indicators, they also provide what we call the signals. Technical indicators provide signals. You can use things like RSI. So RSI may provide you with signals about a probable direction of the market, maybe by using the idea of maybe overbought and oversold condition, so you can anticipate the future move, or sometimes maybe divergence in RSI, so you can anticipate the future move. So also technical indicators, they are important in always anticipating the future move of the market. So now always this is all about all the dimensions, and specifically how to use both. Always, and it's just my opinion now. You have to incorporate both the types of analysis or both aspects or dimensions in your analysis. Now you have to incorporate both aspects. When you analyze the market, you have to incorporate both. So how are you going to incorporate? Mainly, first thing is your fundamental. Now mainly fundamental analysis, this is going to provide you with a long-term direction of the market. This will provide you with a long-term direction of the market. And then when we come to sentimental, the second one, sentimental. Now sentimental, it will provide you with a confirmation. Now this will provide you with a confirmation with that particular direction, and mainly this is in a short term and long term. Now this confirmation will be in a short term. Now it is mainly intermediate and long term. That's sentimental. And the last one, technical. Now technical, as I've said, this will help you with pinpointing the entry and exit. So that's all, and that's how you are going to use those aspects of analysis. So thank you for your time, and I'm sure you have got something. Now if you like this video, you can put a thumb up, and also if you have anything maybe to share, a comment or anything, you can write it in the comment section. And if you think this is valuable, you can share it with other people. And also it's very important to subscribe this channel, because we still share we call them as Forex knowledge or Forex understanding, Forex information and everything. So make sure that you subscribe in order to be able to be notified when we upload other videos. And make sure that you join our Telegram channel, where we share signals. Also we have free signals, so you can join there, because probably you have not mastered the market, so you can be learning from those signals, maybe how people decide to sell when the market structure is like this. So you can join in our platforms, and specifically on the Telegram. We share everything on the Telegram, so you must do that. So thank you for your time, and we'll meet again in another session. Thank you.